Hello traders, and welcome to the Market Open Preview brought to you through FXCL Excellence in Trading. Traders, today is Friday, June 27th, 2014, and it is great to be with you. Coming to you live from Pattaya, Thailand. Sunny skies, hot air, and white sandy beaches. We're back to normal. All right, great to be with you on a Friday, traders. We've got a lot to talk about today. We're going to talk about some news, and we got two currency pairs we're going to look at, one old one and one semi-new one. All right, let's move onward and upward. Here we go. Let me introduce myself to you, traders. My name is William Gilday. I am your moderator through the Market Open Preview series, which goes to you every day before the London Open. Traders, I started trading in the year of 2006. In 2008, I retired from an awesome career in the fire rescue department out of the wonderful state of Florida. 9 days after I retired, I was on the big airplane heading to Thailand. Coming here on a 3-month vacation, traders. I'm still here and it's 2014. Traders, I have to tell you, I love what I do. I trade Forex every single day. I'm in the charts. I'm in the groove. I'm into watching fundamentals and, you know, those guys who get in front of a microphone and just wreck the market. Yeah, I like listening to them too. All right. So before we move on to the news, let's take care of the legal stuff. And this is our risk disclaimer. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Do not trade with money you cannot afford to lose. Traders, if you are using your expense money, please take a deep breath, sit back, and rethink what you're doing, and maybe it's time to open a demo account until you can trade the Forex markets comfortably in your financial situation. All right, hope you got a screenshot of that risk disclaimer and just think about it. Don't want you getting into financial issues trading the markets. All right, market open. What do we got here? 3.5 hours before the market open, but let's talk about markets. The Dow Jones yesterday closed negative 0.13%. The NASDAQ closed negative 0.02%. That's really not very much, but the S&P 500 closed 0.12% in U.S. trading. London has a lot of red, and let's talk about it. The FTSE 100 closed just barely up 0.02%. The DAX closed down 0.64%. The CAC 40 down 0.47%. Euronext 100 down 0.28%. The Nikkei 225, which is currently trading, is down at the moment at 0.62%. The Shanghai is down 0.36%. And the Hang Seng is down 0.14%. Lot of red on the other side of the pond, my friends. Lots of red. Okay, that's what's going on in the markets. Let's talk about the news events for today. Traders, we have in the London session, the Great British Pound has gross domestic product, GDP, quarter-on-quarter and year-on-year, and both of them are coming out at the same time, and they are high-impact news events. There is no other high-impact news events today. However, there's a medium one that I just wanted to make note of, and that is in the U.S. session. We have the Michigan Consumer Sentiment Index is being released today. Now, traders, it's my view that that is a very moving news event that will move the market. So you just might want to make note of that. Make sure you highlight that. So if you're in the market at that point, you can protect your position. Well, traders, it is the end of our trading week. It is Friday, and it's time for Friday charts. Not much to talk about on a Friday. I will say that Wednesday, Thursday, and Friday, the market sort of like came back to their positions where they were prior to last week, and everybody's getting back in line. We're seeing Euro weakness, Aussie strength, Pound strength, Yen strength. We're seeing all this stuff starting to, do what they were doing for weeks and weeks, and it looks like they're heading back in that direction. So the first one we're going to take a look at today is the New Zealand dollar. I gotta say, I just really enjoy trading this pair. It's so easy going. If you're a new trader, this is something you might want to look into, is the New Zealand dollar, and trade this. Everybody says trade the euro. I think this for a new trader is a much better pair to trade. Traders, as you can see, this is bullish. Bullish from the daily chart. Look at this bounce off that 200 exponential moving average, which is support. And traders, what candlestick formation is that at that 200? Yes, indeed. If you said that is a morning star, you are correct. And look at that, worked just like bookwork. Unbelievable. Morning star, and that thing just took off to the upside, took out the previous high, and we have a candle now, and looks like we're going to just continue to go up. All right, let us move over to the 60-minute chart, and we have some trading opportunities here, traders. The issue now is currently where that last candle is, and I took that maybe 20 minutes ago, and we're 2.5 hours before the market opened in London, and this, we can't take this long here. We're trading into resistance. We cannot do that. We need this to pull back. I'd like to see it come back to like that 0.8750 area. You know, somewhere in that area, we'd like to see this pull back. So when we get to that resistance, we are break even and we're safe in our trade. We don't have to worry if it's going to reject the resistance area or, if, we're on the right side of things, go through resistance and just keep climbing, which would be a wonderful way to end our trading week. So that's the trade plan on the New Zealand dollar 60-minute chart. Traders, let's go over to the 15-minute chart. The 15-minute chart, you can see I placed a fib in here. This is a nice trade setup, I will tell you. And unfortunately, or fortunately, we are right now in the sweet spot where we want to take this long. I am hoping that the next 8 candles will just basically flubber around here at this price level and not do anything until the London Open. But remember, we are bullish in this pair, so we want to take this to the upside. So we need a bullish candlestick formation, and let's go long. And we're at about 0.8766, and that would be a good area to take that. And that's the 38.2 Fibonacci retracement where our price is currently, and that would be a wonderful trade. And we want to take profit up at the 161.8, as you know, my favorite take profit area, and that's at 0.8810. Now, remember, at 88.00, you're going to have a little fight there, so you might want to get out a little bit early so you don't have to deal with that rejection at that point because you know there are orders there and people are going to fight that area. All right, let's take a look at another currency pair. I've started watching this pair quite often, and this is the Swiss yen, and this has really been a nice pair. However, it is bearish, absolutely bearish. Take a look at your MACD and your Williams R, they're both bearish. Price cannot get lower than that 200 exponential moving average for a long, long time. Remember, every candle on this chart is 1 day, so it has been fighting that 200 exponential moving average, and that is fine with us. Traders, let's mosey along to the Swiss yen 60-minute chart and take note of where the 200 exponential moving average is at 113.85. Now, we'd like to see this pull back up to that area, as close to that 200 exponential moving average as possible. Then we're going to take this short. I put this trend line in, but we can't be taking a sell trade at support. So this needs to break the trend line, retest it, which is now resistance, and then we can take this short. We're just not going to take the big black candle below the trend line. If it doesn't retest, we just don't get in it, and that's okay. But the rules are the rules, and my rule is it has to retest that. I'm not taking a trade into support. All right, so if this pulls back, which we'd love to see, get as close to that 200 exponential moving average as possible, and then we could take that short. That would be wonderful. So we have 2 candles after this current candle, and then we'll be at the London Open. Traders, let's go to the 15-minute chart and see if we got something a little bit better to work with, and I think we do. And we were able to fib this, and basically I'm looking for this to pull back to the 61.8. We're going to take this short. You can see where I have the TP number 1 on the bottom of the chart there, and that's at about 113.40. 45 in that area. I would take that and take my profits and run. And you can see where the stop needs to be, basically just underneath that 200 exponential moving average at about 113.85. So the closer we can get to the 200 exponential moving average, the better. We'd love to see this notch up and then give us our bearish candlestick formation, and we can take this short. Well, traders, it's a Friday, and I thank you for joining me this week. Please enjoy your break. Don't forget to do a little bit of Forex homework. do a little studying, look at some charts, freshen up for next week. We have a busy week coming up next week. A week from today, we have the July 4th holiday in the United States. So the U.S. is only trading 4 days next week. Thank you, traders, for joining me. Enjoy your break. On behalf of myself, William Gilday, and FXCL, Excellence in Trading, have a good one, traders, and we'll catch you next time. And from sunny Thailand, bye-bye.